Yeah.
Okay.
So I want to just go on to something Andrew said earlier about most companies are not even profitable. Because, I live in this belief system that companies make about 5 to 10%. Because if they were making a loss, they wouldn't exist anymore. And if they make a huge profit, by the way, then more people get into that business and it drags their profit down. Competition will come into that business if something was very lucrative. So we get down to about sort of 10%. And below that, you might as well put your money in a bank so people don't invest in businesses that have very low profit margins. And clearly, if they're making a loss, they go bust. But you were saying that actually most companies, certainly the small companies around here, are not really making any profit at all. No. And then you were talking about their balance sheets rather than their P&L, and then I got confused. So can you just explain that to me, that your belief that actually most companies are not making a profit, probably because of minimum wage and the fact that we don't have cheap labour anymore the way they have in, let's say, China. And that's probably one of the driving factors that's happening.
Yeah.
But just explain a bit more about that.
Okay, so we go on to Companies House Beta quite a lot.
You love your research, yes.
And you go on and you say, pick a company, a local company, you think it's doing really well. And for smaller companies, it tends not to be a profit and loss account. You just get a balance sheet.
They don't need to.
They don't need to declare it. It's not part of the statutory return, so they just give you the balance.
But you can look at the difference from one year to the next.
Brilliant. We can look
and see whether they've made money.
Yes, I mean there is a certain, if they take money out to give to shareholders and things like that, you don't necessarily know that. So it's a bit complicated, but essentially keep it simple. Just look at the balance sheet, and you do have a look at that, and then you go, this is really strange. They look quite strange things. So things like stock pays quite a predominant part of a balance sheet. Right, okay.
How do you value stock?
It could be the law of cost or net realisable value. Well, what's that? I don't know. And how do you depreciate it? Oh, I'm not sure.
One place I worked, we had a thing called the flake mountain. And it was this huge pile of plastic granulated flake, and it was just all basically contaminated. It was the wrong colour, or it had wrong plastics mixed in with it. And if we didn't know what to do with it, you should just stick it outside on the flake mountain. And the flake mountain was something like 200 tons of plastic. It was huge, literally a mountain. But in the stock, we valued it at full price of virgin, brand new material, because it had gradually grown, and we didn't dare say to the auditors, this thing, so 200 tonnes would be worth about £200,000, about £1,000 a tonne. And we had 200 grand's worth of, and it was actually worthless. I probably had to pay people to take it away.
Fantastic.
But and once I said to the auditors, you do realise the flake mountain is worthless.
Ooh.
And they went, what? What? And they went running off to the MD. They went running off to the BMD and said, "Is it true? Chris has just..." And he went, "No, don't listen to Chris.
What happened to Chris?
Chris is a bit eccentric." I was in big trouble the next day for telling the truth.
And yet he's got this certificate from Cambridge.
In fact, looking back, I don't know why I did tell them the truth. But so they decided to side with the MD and believe the MD and not me. And to this day, it's probably still in the accounts of company.
Of course.
So you're right. Valuation of stock there's
also other things, like, for instance, goodwill. So you look at it and say goodwill. Okay, so one company buys another company, and there's a transfer of shares.
Yes.
So you say, well, we've agreed the price generally between them because there's a bunch of shares, and that revalues this asset at this massive number. So we put that in the accounts.
Well, that's the future value of business, isn't it? Those customers are going to be worth loads to us.
Absolutely, yes. And we can amortise that, of course, and that sounds great, but we'll have that number.
It's hard to estimate, but it is a real thing, goodwill.
Yes, but
there's nothing on your balance sheet.
Yes, actually.
Of course it does. It puts everything on it. But there's another thing which people don't put on their balance sheets, and that's things like redundancy liabilities, which every year creep up. And another one keeps up, and another one. Okay.
If you have to get rid of people, the cost you'll have to pay, you mean?
Well, so your business closed.
Or if you closed, you'd have to pay everybody off.
That's fantastic. Your business closes, and there was some assets left in that business, and you would have to pay this liability out, the redundancy liability. It's a real liability. It's real cash that has to go out the door.
What about leasing a building and then having to return that building to the landlord in the state that you took it on?
Yeah.
So you've done a whole load of
There's a
work,
cost
and
there.
you've done all sorts of things, installed all sorts of equipment,
Yeah.
and then when you close your business down, well, you've got to restore that, haven't you?
Yeah.
Is that on your balance sheet?
Probably not. So the first thing we're saying is the balance sheet is a bit ropey.
Yeah.
But you're also saying that the balance sheet shows that most of these people are not even profitable.
Yes,
When they
because
add everything up.
when they add everything up, there's hardly a living. There's a meager living for everybody in that organisation. By the
Yeah.
time they pay the accountant, they've paid the HR department, they've paid the quality department, they've paid this, they've paid that,
Yes.
they've paid the administrators, and you look at it all and go, "Whoa, there's nothing." In fact, I actually believe if you actually put all the liabilities on it, you actually make a loss.
Yeah. And yet-